There is not exactly an OG terminology over there in custody because how quickly it evolves and how quickly you need to innovate in order to stay relevant. It's not like a secret that when we started, we basically were one of the first folks that introduced this concept of MPC Wallet as a Service. Stablecoins is like a great business, and Tether and Circle kind of publish how much they make. Anyone will be jealous. Is Tether the next Kodak? Would you be fast enough to adopt and change your business model or not? In order for us to really get to mass adoption, really we need to solve for law enforcement and for just basically making sure that there is a safe and resilient economy where you don't have fraud and you don't have money laundering and you don't have terrorist financing. The two big things will be Bitcoin and the second thing, Bitcoin Reserve. Even if that doesn't happen, the thing that I'm most excited about is really what's happening with stablecoins and payments.
Welcome to the On-Chain Culture Podcast, where we explore the transformative power of blockchain technology and its potential to reshape industries. And Max, we had an amazing guest today, Michael Shaulov, CEO of Fireblocks, who seems to be a very inspiring person. So I love whenever we have podcasts that there's someone who really shares many, many insights and a broader view and vision of their industry. And we discovered their innovative off-exchange product for the future of stablecoins. We talked about tokenization and Fireblocks' grand vision for its network. But Max, tell me, who should listen to this episode and what can they learn from Michael?
This episode is for everybody working at financial institutions and that are thinking about entering the on-chain economy. It's because Fireblocks is really sitting at the heart of this industry, starting off as the most secure or the most popular custody solution provider. And now over the last years, they really expanded over different segments of the business and really now covering the whole value chain of the digital asset industry. And I think what made this conversation amazing was, again, the whole breadth of the topics that we covered. So we talked about the different features and solutions of the Fireblocks platform, going deep into DeFi integrations, but also about the off-exchange product that's really some kind of a hybrid between CeFi and DeFi. And then we quickly entered the discussion regarding stablecoins and tokenization. And what interested me most also in preparation of this conversation was his take on where the business model of stablecoins is going to evolve. And then last but not least, something that we couldn't miss, we wanted to ask Michael about his view on current regulations in the US. We talked about Operation Choke Point 2.0 and how also for him the whole regulatory perception has changed, with now politicians asking him again to come to Washington and speak to them. So this was really interesting, and he went quite deep but also quite strategic about all the topics that we covered.
100% agree, and that's why I'm very glad to have Fireblocks as part of the Digital Asset Season, Europe's largest educational campaign on digital assets. And for those unaware, the Digital Asset Season is a 8-week-long educational campaign focused on the most important verticals of the digital asset industry, from physical and digital events through media deep dives like this podcast. And Max, did I forgot anything, or can we jump directly into the conversation with Michael?
Let's go right into this conversation.
Okay, see you on the other side. Quick disclaimer before we get started. The content of this podcast is for informational and educational purposes only. It is not a recommendation to buy or sell any financial instruments, securities, or cryptocurrencies. All information is provided without warranty, and the views expressed by the hosts or guests are strictly their own opinion, not financial or investment advice. Please note that we or our guests may hold positions in the financial instruments or cryptocurrencies discussed. And now, enjoy the podcast. Okay, Michael, let's dive in directly. So we're recording this just a week, I think, after the Fireblocks Spark, so your flagship annual conference. And the agenda was quite diverse, so covering a lot from crypto payments, tokenization, regulation, interoperability, and derivatives. And as an icebreaker question, before we get into who you are, I'd love to hear, what was your biggest takeaway from this event? Was there any particular presentation or conversation that really stuck with you?
Yeah, I think that one of the interesting conversations we had was actually with the folks from Solana on how they see this ecosystem develops, and basically the fact that you have so many use cases that can live on the same blockchain, from payments and tokenization and some of the replatformation of really traditional finance flows to some crazy meme coin stuff, right? And why it actually makes sense that it will sit on one sort of ubiquitous infrastructure, and how that actually drives, I think, some kind of future proofing for them in terms of scale. That was one of the interesting things that I've discussed over there. There were many others, to be honest. We had kind of conversations with folks from BlackRock about how they see the future, but that's probably the stuff that is most interesting.
Yeah. Are you yourself a meme coin trader?
I'm not a trader. I did buy some Dogecoin for my kids because they asked me for the Dogecoin. They already did 400%, so they think that they are some kind of investment geniuses at the age of 9. And then we did some funny stuff with Bitcoin, but I'm definitely not a Bitcoin trader.
Yeah, it's always the same journey everybody who's in crypto undergoes. So they will wake up one day to another reality of the cycle. But interesting that you introduced them already to Doge. You mentioned Solana, and I think also due to the reason that they also underwent quite an interesting evolution. But that's also is true for your company, for Fireblocks. So when you guys started, you were deeply focused on the custody wallet technology side of things and really deep into business with crypto native trading firms and asset managers. And now over the last 2 years, at least from the outside, it seems you also had a big of an expansion and also moving obviously to traditional financial institutions, partnering with banks like ABN AMRO, BNP Paribas, BNY Mellon, and so on. And it's not only about custody anymore, but it's really about the whole end-to-end management of digital assets. And for this podcast, we really want to dive deep into all the different segments of your business. But nevertheless, you're the custody OG, so we have to start here. And I would really be interested in having you tell us what the current landscape for custody solutions look like and how you play today in this market.
Yes, I think the custody space evolved a lot, and I think it also continues to evolve. To be quite fair, I think that there is not exactly an OG terminology over there in custody, because how quickly it evolves and how quickly you need to innovate in order to stay relevant, right? It's not a secret that when we started, we basically were one of the first folks that introduced this concept of MPC Wallet as a Service. It was basically us, Curve, and Unbound. Curve ended up with PayPal. Unbound ended up at the hands of Coinbase, and we kind of were the only one that stayed course as an independent provider. But the reality over there is actually that why that was important for people, right? If you look at what happened before we, I think, brought MPC into the crypto mass market as a group of three, most of the secure technology was based on multisig, which was a great concept as a security concept, but the problem with it was that it was purpose built for Bitcoin, and then it was not designed for a universe where you have a lot of different blockchains with a lot of different underlying technologies, because you basically ended up with a lot of underlying fragmentation of how this was managed, right? So MPC actually came in the right time, basically in 2018, to solve a shift in the blockchain market, where you started to have a lot of different blockchains, right? And that, I think, what gave us the momentum. Now, kind of what happened next was that people were like, okay, but the first version of MPC, A, was somewhat slower, B, was mostly for hot and warm wallets, so it didn't actually solve for all the use cases. So over the years, we basically increased the stack over there. We now have call wallets that are based on MPC. We just made an announcement last week that we released a new MPC algorithm that is called our kind of flagship MPC algorithm that most of the industry standardized on was called MPC CMP. It's an algorithm that Fireblocks published as an open source, and now we basically introduced a new MPC algorithm that is called MPC BAM, and that actually provides you 100x performance enhancement, right? So, when you think about custody, I think, or wallets, right? I think, and you're basically following the use cases. So the question now is not, okay, how do you only safe keep Bitcoin? The question now is like, how do you create a systems that look like Apple Pay, right? That you can really come with your wallet into a shop and buy coffee, and the experience feels good. So the long story short is Fireblocks did evolve and basically addressing all those different use cases that people have over the years. And then also there were some use cases that were more regulatory use cases. For example, we now also support HSMs, but that is more areas that applicable for banks or to special regulations like Hong Kong.
So is it fair to say that like 7 years after founding this company, or seven years in the market, that MPC still is like the final frontier when it comes to crypto custody solutions and security?
Yeah, I mean, I do think that there is a lot of excitement around smart wallets or account abstraction, and I think that there is definitely something to say about the fact that it is a very exciting technology. The problem at the moment with account abstraction is that you don't have, I'll call it like a silver bullet, right? It's like it's a technology that has a very significant fragmentation. It works in one way on Ethereum. It will work in a different way on other EVMs. It doesn't exist on Bitcoin. It works in a different way on Solana. So if you basically have decided to build an application that is only, let's say, doing transactions on Polygon or on Base, right? I think it is like a frontier that is already relevant, and people definitely putting it into production. If you are still building an application or a use case that you are agnostic or indifferent to what is the underlying blockchain, and you don't want to bet on a specific horse in that race of which is what is the best blockchain, what is the fastest blockchain, what is the most scalable blockchain, then yes, MPC is still the kind of silver bullet that in the space.
Mm-hmm. What I found interesting, from my observations when I looked at the space for the last 2 years and innovations coming out from the security side of things, I found super interesting how the industry addressed or responded to the whole FTX dilemma, or the FTX crash, and also in the past other exchanges going bankrupt. And we've seen some off-exchanges products emerging from that crisis. And you also developed a solution that shall mitigate these counterparty risks that are associated with trading on centralized exchanges. Can you shed a little bit of light on what this exchanges product or off-exchanges product is, and how well it is adopted currently in the market?
Yeah. So I think just maybe kind of half a step back, right? When we think about what our main mission in Fireblocks is, kind of addressing all the risk and custody and cybersecurity risk, which we discussed a second ago, is definitely key. But then you have the counterparty risk, right? And this counterparty risk issue existed or still exists in the system, and FTX was maybe kind of the Armageddon event of how this unfolded. But we shouldn't also forget Three Arrows and Genesis and BlockFi and everything, Celsius and everything that happened over there. So the challenge is really how you create a new market structure in which both institutional, but honestly you can even extend it to retail, they can allocate funds to the exchange, the exchange is able to give them credit to trade, and the exchange knows that they are able to receive under ordinary circumstances, right? The exchange knows that it can access those funds and settle the transactions and have the funding to what it's owned. And the client knows that if the unordinary happens, right, and the exchange is going bust, like FTX, right, they're not going to lose the principal that they've allocated, right, or that the funds are not being misappropriated, and basically they're showing you that you have a balance of 100 coins over there, but actually they moved it to some kind of sister trading firm, right, that is now losing all that money. So there are different solutions for that. I think that historically, some of the players in the space took what we call like a TradFi approach, right? So they basically build this on a concept that we call centralized clearinghouse. It's like a concept from the 60s, right? This is the way that Euroclear and Clearstream and DTCC and all those guys are working. Basically, there is an appointed third party, right, that is usually has some kind of custody license or some kind of specialized license. Everybody giving them their money, they're tracking the balances, and at the end of the day, they will basically settle it according to the rules, right? And that was one way to do off-exchange. We took a very different approach, and we took a crypto-native approach, and we said, okay, what can we do in order not to introduce another third party that now, instead of like taking a risk to the exchange, you're shifting the risk to someone, right? And that is also like has its problems, right? Maybe less conflict of interest, but actually from a balance sheet standpoint and concentration of risk, it has almost the same level of issues. So we built this off-exchange solution, and our off-exchange solution is fundamentally different because it is able to do two things. One, we launched it with Deribit, with QCP, with Bybit, and so on. And what it does, it basically creates this kind of almost on-chain account using MPC that the exchange holds part of the key and the client holds part of the key, right? And there's also like, some resolution mechanism in which if there is a disagreement between them, but eventually everybody know that the funds, everybody are able to see where the funds are. They can actually see them on chain being locked, right? Fireblocks is not introducing their own risk into this. We are not basically a party to that trade or to that settlement. And it is honestly been like, one of the most complicated things that we've built over the years. And it took us quite a lot of time to take it to market. But we believe that this is a much more future-proof approach to where the industry and probably like, even the traditional financial market from a market structure standpoint want to go, because honestly, like, if you can, like the entire ethos of crypto is to reduce as much intermediaries and counterparty risk that those intermediaries bring to the table. And this is like a very crypto-native centric approach to solve the problem. And look, so far it was actually showing really good results. We launched it earlier this year. Now there is more than $500 million locked in those collateral accounts. It's like very flexible. We're opening it up to more and more assets. We partner with folks like Hashnote that now are able to deposit tokenized money market funds into it, so you can even earn interest on whatever you allocate to the exchanges. Going pretty well.
It's interesting because one could make the point that it somehow decreases the attractiveness of DeFi protocols. Obviously, there's also a long tail of other features or something that these protocols can do that centralized like products cannot. But like the aspect of self-custody and minimizing counterparty risk was one of the main like benefits or drivers of DeFi adoption in the past. But again, there are other features as well. Yeah.
Yeah, but actually, to your point, it's kind of interesting. I actually do see it as like some kind of soft DeFi or even mini DeFi, right? Because it's true that you are not using kind of the EVM language to execute that, but you basically creating some form of DeFi capability using MPC. Now, by the way, we are thinking on how we can evolve this through true DeFi EVM-based technology to, like, as a next phase of the evolution, to build more sophistication into it, because there are limits of what you can do with MPC. For example, cross-collateralization. I do view this as kind of a step into the DeFi.
So it's kind of a hybrid solution for some folks. Yeah, interesting.
Yeah. Again, the reason why we're doing it with MPC and not with pure DeFi is that clearly, if you want to trade on Deribit, which is one of our biggest partners for this, is how do you do Bitcoin, right? And if you had to do Bitcoin and Ethereum and now Tokenized, you don't have really good solution right now on DeFi to actually do this.
Mm-hmm. Okay, interesting. Yeah, because Vicky mentioned the Spark conference that you did just last week, and I think one of the major announcements was about DeFi. So you announced that you expanded your DeFi suite with some like key new products or new features when it comes to swaps and some token allowance manager. Can you give us like the high level process of how you think about integrating DeFi capabilities into your platform?
Yeah, sure. So I think that most people that are kind of in the institutional DeFi space, or at least been in that space for some time, know that we almost kind of single-handedly brought DeFi to institutional Fireblocks. And it also almost happened by mistake back in the beginning of 2020, when we had one of our key clients, Parify, that kind of told us, hey, look at this. This is really cool. We're doing those strategies on Compound. You should integrate them. I saw that. I said, like, wow, this is like quite exciting. My CTO and co-founder at the time, who is now our chief product officer, was like, well, he actually had like some kind of audio roadmap that he was looking at, and then we launched it, and kind of the rest is history, right? So we have probably like, the vast majority of institutional clients that are on DeFi are using Fireblocks, right? So the long story over there was that the way that DeFi expanded into institutional market was essentially, okay, there are a lot of DeFi application. How do you provide a reasonably secure access to those DeFi applications? But that approach still has to be very open, right? Because the strategies are almost infinite, right? Tomorrow morning there is a new nugget swap protocol. There will be someone that will want to connect to that and do markets, right? Mm-hmm. In order to do that, we basically had to establish our DeFi browser extensions. We have the Wallet Connect connectivity and so on, which allows arbitrary access. And on top of that, we were basically building more and more security stack, right? So the last things that we've done throughout this year was to enhance our policy engine with that regard, to create transaction security and transaction simulation. So we're basically pre-screening the decentralized application that you're connecting into. And just to share some numbers, we actually, from the beginning of the year, we scanned 80,000 connections and over 4 million transactions that were executed. And we blocked over 160 of them because people were trying to connect to phishing websites that would have, phishing decentralized applications that would have withdrawn everything from their wallet. So, we're quite proud of it. A lot of money was saved over there from getting hacked. Mm-hmm. The next iteration of that is clearly the allowance manager. So I think a lot of people are not really familiar with how DeFi works, but actually when you're connecting, for example, to Uniswap or to Aave or to any DeFi application, you're actually granting them the right to pull assets from your wallet. This is how DeFi actually works. And it's almost like giving someone reverse ACH, right, to being able to debit your account whenever they want, right? So when you have a protocol that is being compromised, or just like a reasonably good hygiene, right, is to basically always close that permission after you end up using it, right? Because if you, for example, forget it, and after a month that protocol is being hacked, the hackers will withdraw on the basis of that permission, right? So we actually build that into our UI. Now it's very easy for our clients to do that. And then I think that actually what we started to think about is how do we really change the game on the hackers, right? Because still, as I kind of outlined, there were 160 attempts that we had to block, right? And honestly, it's an alert that shows in your app, and there are a lot of like red screens over there, but someone can make a mistake. And it's also quite heuristic, right? So it's not guaranteed to work at, there's always like 0.1% that there will be some kind of false kind of true negative, right? And you basically allow that to pass through. So in order to change that game, we're basically now taking an approach that we were saying, okay, there are a set of DeFi utilities that are blue chip utilities. The first one that we selected is Uniswap. And for that, which is basically we say like, this is the swap protocol that everybody are using. And if the only thing that you want to use is swap, then let us basically build an extremely secure way for you, secure by design way for you that you can do swaps by integrating Uniswap into the Fireblocks UI, wrapping it with all the policies, wrapping it with all the security mechanism. And when you do that, with the assumption that Uniswap is also taking their fair share of accountability on protecting their protocol, then you're not susceptible to all those phishing attacks, right? You can't accidentally access a Uniswap that is not really a Uniswap. And we are planning to basically extend that to bridges. We're planning to extend that to lending markets and so on. And I think this is probably like an interesting point to explain why we are doing it besides the security aspect of it, because if and it is related to what you said at the beginning of the podcast, is that we're seeing the market shifting, right? So for the crypto trading hedge funds, yes, they want the full span of that rainbow of all the DeFi applications, right? But if you're talking with a payment company that the only thing that they want to do is to swap USDC to USDT or USDT to USDC or some very basic operations, they don't need the new nugget swap that was released yesterday, right? They want to go to they want like a secure, conservative way to go and benefit from DeFi. And we believe that actually creating this kind of app store of pre-vetted, fully secure applications that are operationally available to them will be able to bring DeFi, like the apparatus of DeFi, into the mainstream financial use cases, and that's the approach that we're taking there.
Okay, so you could say that, and that is true for all the different segments of your business, that you're somehow building this big gateway into the on-chain economy that helps like institutional players and capital markets and in general to access this new economy very safely, very securely, right? And that's quite a powerful position to be in, because obviously every flow has somehow touched by your platform.
Yeah, I mean, look, I think at the moment we're basically processing, depending on the blockchain, between 10 to 30% of all the transactions on the blockchain. So, for example, 15% of the transactions on Bitcoin, they're going through Fireblocks, right? That's like big responsibility. Somewhere similar numbers, for example, of stablecoin volume. So this is like a big responsibility as we see it. And I think what we are doing continuously is we are trying to understand what are the use cases and what people are trying to do and find the solution for them for a product and for an experience that solves for the use case and the security. Because as I can explain, right, people don't want to hear this, but at the end of the day, security comes, you need to do different security, which is dependent on the use case, the flexibility, and the performance, right? And we always trying to basically take a security first approach. and find the optimal solution for them to give them that gateway into the use cases that they need. But it's also starting to become very clear that you can basically paint everything like, with one brush or with one color.
It's time for a quick ad from us. While you're enjoying the conversation, let me give you a quick sneak peek of what's coming up in this exciting 10-week digital asset season. We've already kicked off the season with an exclusive event in Zurich, and you can check out the recap and all the images and insights on our socials. But you'll have 2 more opportunities to meet our partners in person or digitally. We're bringing together the traditional finance scene with the on-chain economy in London, February 4th, and Frankfurt, February 19th. Plus, we've got 2 more industry calls coming up where we'll dive deep into the hottest topics in institutional DeFi and digital assets. You can find the link to our event calendar in the show notes. And that's not all. Every week we'll release a new podcast episode like today's with Fireblocks, alongside a detailed newsletter dropping every Friday. And now let's get back to the podcast. And you already started with talking about use cases. Going into the next topic, like stablecoins and tokenized assets, for example, seem to be a major cornerstone for the future of capital markets. And you, or Fireblocks, have really established yourself in the space. How do you see tokenization evolving, and what role does Fireblocks want to play driving this adoption?
Yeah, so you're absolutely right, Victoria. So we are seeing ourselves as a major player in that. Honestly, I showed some of this information at Spark, and the tokenization market is still very early, right? And the first thing that we believe actually found some level of product market fit over there is the tokenized money market funds that we have nowadays from the likes of BlackRock and securities like Bidel, Hashnote, WisdomTree, and so on. We had all those partners and clients of ours at the conference, and of course there are more interesting peripheral use cases or stories that you see over there, like tokenized loyalty clubs and tokenized products in different emerging markets. But I think that the interesting thing on the tokenized money market fund is that it's a fairly simple product, right? It's basically, you have something that you essentially want to have in dollars and you want to have an interest rate. And for me, it kind of solves this issue of stablecoins, right? So some of the issues that we have with stablecoins. So I think stablecoins has 2 use cases. One is the payment and the settlement use case where you want it to move. And then, interestingly enough, big parts of the community are actually using stablecoins as a reserve instrument, right? You have basically people in Turkey and in Lebanon, in Venezuela, and Colombia, and all those countries that, why do they own USDT or USDC? Because they want their savings to be in dollars. It's pretty much like unavailable or inaccessible to them through the local financial system. And that's the solution for them, not to be exposed to, 13 to 95% inflation. But for those people, they are not currently capturing the yield, right? The yield is being transferred to Circle and to Tether, and great companies. They're making a lot of money, but I think that there's something to say about why won't they also benefit from that. There is also like a related use case, which is the collateral use case. So we talked about the off exchange earlier, right? You basically have those situations that we want to trade. You asking me to basically lock a margin that can be locked there for days or weeks or months, right? And if I just basically locking it in USDT or USDC, I'm not getting the 5%, right? And that can actually enhance significantly my trading strategy, right? So what's the historic solution is like, let's put it in the US Treasury. How do we do it digitalized? Let's basically tokenize that in a form that it can move as a token. So that market basically moved from like 0 at the beginning of the year to $2.5 billion in circulation. And we're seeing basically the different players, whether it's like, BlackRock addressing the more kind of the first use case that I mentioned is that you have foundations. They have a lot of assets that cannot be banked. Like how do you give them yields in dollars? And for example, Hashnode going after very aggressively after the collateral use case. And that's like a good solution. Those are amazing solutions. The only thing that to say over there is how early we are. So it's 0 to $2.5 billion is an amazing progress in 12 months, but this is 0.01% of the total US Treasury market, right? So there is so much ahead of us that is amazing. We basically are looking to partner with people that are working on exciting tokenization projects on the technical front. So basically, we have now a platform that is our tokenization engine, and people can just come in and they can virtually deploy and mint and control the life cycle in a secure way of any assets that they want to do. So we have people that are doing stablecoins, we have people that are doing money market funds, various forms of securities, we have people that are doing NFTs, and they've been quite successful. And of course, after that, they also have the access to the Fireblocks network. So we can also help with facilitating some level of distribution. Again, we are not like, broker dealers, so we are not doing the distribution in the kind of like according to the traditional terminology, but the fact that you have the Fireblocks network and people can find you, right? And you have this community like Spark that you can come and discuss those things. It's actually very useful for people that are now bringing tokenization to market.
I think it's interesting that you already talked about so many different types of use cases, because I would say like most people, when they think about tokenization, still think about, okay, tokenizing funds or bonds, but you've mentioned so much more that is possible. And you already talked about that people can tokenize many different things as they want it to be. Is there any like creative use case that comes into your mind, or unexpected use case for tokenizing assets?
Yeah, I'm honestly like, I don't know how people haven't done it yet, but my idea, it actually like, an idea that I had when I was, when like that entire NFT cycle was happening in 2021, 2022, right? So the interesting thing is that you can actually create some form of financial asset with art, right? So imagine that you have stable coins, but basically every coin has its own, kind of NFT attached to that, right? Which is honestly something that we had, like, I don't know if you guys remember, maybe you're a bit young, but like, back in the days, there was like, this thing that there was like a special series of coins that they had like a different mark on the back or on the front, and people would collect them, right? People would basically go and collect. They were like different euro, right? Like even like euros, they had like different
True.
faces, right? And people would collect them, and they will be proud that they found that unique series that was minted in like Holland. So when you think about it, that can actually be sort of like expanded in a very nice way to financial assets, and it can actually bring financial assets to life. What I've expanded with stablecoin is maybe like the most naive way to think about it, but imagine that you're now investing in a green bond that they go and they develop like a solar field, right? And the bond also has some kind of interactive NFT that you can see at every given moment, basically what your investment is doing, like how much of that was already developed, like how much energy it is producing. So I think that there is an actual opportunity there across like many different pillars to create something that was not possible with the way that the traditional financial system works, and I think it will be a unique and true experience that people might be interested in, right?
That's something for all the entrepreneurs to figure out that are listening right now. Maybe coming back and combining 2 points that we've been discussing. So you mentioned stablecoins and obviously the importance as a cash leg also for settlement of these tokenized assets. And on the other hand, we discussed your role in this whole on-chain economy and as how you serve as a gateway into this technology. I would like to combine these two aspects and talk to you about the business model or the evolving or evolution of the business model of stablecoins. Obviously, we've seen Circle and Tether making their money off the treasury reserves of the underlying backing. We see now new stablecoin providers entering the space, and we can already see them sharing these revenues or profits with distribution partners. And I think looking in the future, this somehow has to erode. The margin for the stablecoin issuers, they have to come down quite substantially, I would think. And now I would again thinking about your role in this ecosystem, that you also concentrated on enabling others to tokenize their own fiat and issue stablecoins. How do you think about this question of business model for stablecoins and how 5 years in the future, how you make money with them?
Yeah, I think it's a good question. So, first of all, stablecoins is a great business at the moment, for sure. And Tether and Circle gonna publish how much they make. I think anyone will be jealous in what's happening over there. But it's also clear that this will have to evolve, right? Most of the people that we see issuing stablecoins at the moment, they are taking a very different approach of basically distributing through various technological and regulatory mechanisms, right? The assets to the end users. There are a lot of those projects, from Agora and a few other folks that are doing that thing, and that's probably the future first and foremost, right? And I think Circle and Tether will have to adopt. How would that affect their specific business model or their financials is TBD. But I mean, it's almost. I saw someone posting on LinkedIn a few weeks ago, some kind of comment is Tether is the next Kodak, right? And basically what they were challenging them with assuming that will happen, I think similar to Kodak, would you be fast enough to adopt and change your business model or not? Honestly, again, in Spark, we had Paolo, the CEO of Tether over there. And I came out from that fireside chat as oh, okay, those guys actually, if someone will be able to dodge that Kodak moment, is them. I think they're kind of aggressive.
That's also interesting because they expand the usage of their USDT just by also tokenizing different assets and also going into lending and other venues. So it's really a smart strategy to follow.
Yeah, I think that just from an entrepreneurial standpoint, it's very clear. From the energy standpoint, is that those are people that are not going to just stand still and have someone else to come after the business. And I think they also have the pockets and ownership and I think the corporate structure to be quite agile and very lean. So probably they're. If I had to bet, I don't think they're going to be the Kodak guys here. But it's true that the business model will have to shift. Right now, we've been seeing quite a lot of interesting ideas over there. So again, from sharing the underlying interest to basically blockchains that are sharing this, basically monetizing it through sequencer fees, right? And the business models will have to evolve. MiCA does dictate who can engage in what type of business model with the stablecoins they're issuing. But overall, look, I think the circulation of stablecoins is going to continue to increase. I think there is a projection. We have a projection that is going to get to from the 180, give or take, billion right now to 1.7 trillion in the next couple of years. So, 10x increase. I think that what is interesting to see is that on top of that, you're getting something like 30 to 50x velocity in terms of like, how many transactions are being made that are used for payments and settlements. So I think all those business models will be valid.
And now we've talked about a lot of topics. So from custody, tokenization, stablecoins, secure settlement. And now I'm curious, is there something missing in enterprise-grade digital asset infrastructure? Is there any untapped opportunity or trend that hasn't gained the attention that it deserves?
Yeah, I mean, I think that when I think about kind of the two next steps that will be important for this to continue and move forward, specifically in terms of what we're seeing with regulation, one of the missing components is definitely a better addressability of the compliance artifacts around crypto. And I think, most of the crypto native folks don't like to think, or maybe this is a too much a harsh statement, right? But they do think about this as maybe something that we will be able to soft land into. But I think that in order for us to really get to mass adoption, we do need to solve. It's not even like for the regulators. Really, we need to solve for law enforcement and for just basically making sure that there is a safe and resilient economy where you don't have fraud and you don't have money laundering and you don't have terrorist financing, all those bad stuff. So the real solution for that, in my opinion, is some combination of on-chain identities, so to be able to represent who is who in an anonymized way on the blockchain, and to introduce certain policies which are kind of actually built into the asset, right? So, and I think it's kind of interesting to think about it because, and even like the regulators have a difficult time to wrap their head around how this can fundamentally change the entire kind of compliance posture, right? Because today we are basically relying on a set of intermediaries to vet if the next chain of the transaction should proceed or not, right? So if, Victoria, I send you money, then, my, whatever Chase account in the US will validate that your Deutsche Bank account is valid, and Deutsche Bank will KYC you. So there's and probably there will be a bunch of people in the middle that we don't even think to in that transaction that will need to rely on each other compliance. And usually this compliance also works out after the fact. Now, the interesting thing is that if we can actually apply identity and we can apply characteristics to each one of those individuals, again, in a fairly anonymized way, then the asset itself can enforce this, right? So if Tether would want to basically say, I'm going to limit the circulation of my coin to only vetted individuals up to those amounts, right? Or they have some fraud that they're seeing between, I don't know, US customers or specific exchanges to specific entities that are doing some of these pig butchering attacks, right? Then they can actually codify that to limit those transactions as part of the asset. And you don't need intermediaries in the middle. And then you're taking it to the more sophisticated use cases around the securities and basically the concept of accreditation, right? Should anyone be able to invest in the money market fund? Yes. Should anyone be able to invest in a crazy hedge fund? Probably not, right? So you can basically now clear the access. So that I think is a very interesting opportunity that we are looking at. I think that it actually requires the entire ecosystem to come together and evolve it. And I think that there are more ideas as we will start building that. I think that will basically unlock a lot of opportunities. We'll start seeing on-chain effects. We'll start to see a lot of this stablecoin stuff coming in. And I think our goal is really kind of to be the trusted partners for our clients to build this ecosystem with the security and scale simultaneously. It's just that there are not that many people, or probably there is no one else in the industry that is currently processing at the scale that we are doing, right? So we now doing over 20 million transactions per month. That's what we did in November. And that gives us a really unique position to see a lot of things, test a lot of things, and make sure that we are able to support people in a very secure and scalable way.
And speaking of trusted partners, I think one big trend for next year could be like the US regulators becoming trusted partners of this industry, which would be nice, I guess, after all those years. And like thinking about the different initiatives that are currently being discussed, like the stablecoin bill, new regulation concerning market structure, the like abolishment of SAB 121. What do you think? Like, what's your on your wish list? Like on the first place, what do you wish regulators to come forward and change?
Yeah, I think that I think for sure there is a view that this is going to happen. You know, I need to take the train and flights to DC twice this week, so it's actually already happening in terms of the regulators moving forward. And I haven't been in DC for like a year and a half, right? Just for the record of how quickly it is changing to be very positive.
And that's by their invitation, or okay, interesting.
Yeah. It's like through facilitation, and I was invited to be part of it, and there are quite a few other parties. But anyway, I think that the three kind of easy asks that will probably do the most amount of benefit to everyone is the kind of rollback of what we call Operation Checkpoint 2.0, which is effectively just allow banks to onboard and provide fiat accounts to crypto company or to companies that are working with stablecoins and cryptos, which was not something that was feasible in the US for the last 2 years. There was literally 1.5 banks that would give you a bank account if you process those transactions. The second one is really the removal of SAB 121. This will bring back or will unfreeze the banks to do custody. I think it is important to bring in much more kind of senior, investors in the space and pension funds and so on, that they honestly need those people to be their trusted counterparties. And the last one is a stablecoin bill or some interpretation layer, but basically also to unlock the ability to issue and process stablecoins in the United States. Those three will be a huge win for the industry, and then we'll be able to build on top of it.
And mentioning once again SAB 121, I think, I guess that many of these banks are now like really preparing for entering the digital assets markets, and they should obviously think about: do we want to build ourselves? Do we want to partner? Do we want to buy? Like these classical conversations that are going on in strategy departments. What's your feeling how these conversations are currently going on in these institutions?
Yeah, I mean, I think eventually, I think that they are being unfrozen. There was a lot of momentum around those conversations back in 2021, early 2022. Then FTX happened, and SVB happened, and all those conversations were put on ice. The only bank that actually went live is Bank of New York Mellon, that is using our technology, right, in the US, right, in terms of their license, and now those conversations are starting to. There is a resurrection, right? That I can share, and there are a lot of new discussion around how it should be done. The reality is that it's quite simple. I mean, I don't think that most of the banks, if not all the banks, are able to really build it themselves securely. You know, we invested 150 engineers over 6 years. I think it will be quite difficult to do something similar. So they will have to partner with someone like Fireblocks or some of the other providers that are in the space. I think that they don't want to do sub-custody. They want to basically bring the technology in-house, where we play a very, we are purpose-fit solution for something like that, where you can basically own the licenses and own the majority of the services around the technology and kind of offload the annoying things to us, like to run the nodes and some of the complexities of updating the networks, which allows them to really operate that in a fairly lean way. So I'm quite optimistic that in the next 12 months we will see quite a few additional big names coming and announcing it in the space.
As you already talk about the next few months, as we wrap up this podcast, let's also look into the future. What excites you most about where Fireblocks and the industry as a whole are headed into the next year or headed into 2025? This podcast will be released in 2025. So are there any developments or trends that you're especially looking forward to?
Yeah, I mean, I think that we are in the cusps of really hitting some of this true mainstream adoption, right? I think that most of the things that we talked about here so far, they're exciting. They're actually happening in reasonable volumes, right? But actually, like, sort of like pushing it to the mainstream adoption is going to be monumental, and I think it actually will start happening in 2025. I think that the two big things will be Bitcoin, which I think is happening, right? Because we already have the same amount of holders of Bitcoin as almost like gold. And the second thing, and maybe like, by the way, one of the things I will be extremely excited to see is this Bitcoin reserve that potentially will happen in the US. So we'll have governments that will be adopting Bitcoin. But even if that doesn't happen, the thing that I'm most excited about is really what's happening with stablecoins and payments, and the fact that we will start seeing more and more of the traditional payment providers like Stripe and like WorldPay and many others like Visa, many others that are pipeline, basically lighting this thing into their existing architecture and into their existing rails. And I think that this is actually going to open up and unlock so much, because I think the most important thing for all the other use cases is that we have an on-chain currency that can be paid everywhere. And that will happen through that distribution.
No, I'm as excited as you are. This sounds really cool. Thank you very much for all the insights that you've shared with us in the last hour. For everyone who's excited to get in touch with you, where can they reach you? What's the best way to talk to you?
So they can email me on Michael at fireblocks.com, LinkedIn, and fireblocks.com. You just go to the website, contact our team, and we'll be thrilled to help you guys build whatever you guys are building.
Perfect. Thank you very much. Thank you very much for joining us, and hope to see you in any of the future events that we're also hosting. Any more to say, Max, or did I forget something?
No, that was wonderful. Okay. Thank you so much for giving us all these insights.
Sorry, Max. Thanks so much for doing this. It's great.
Okay. Bye.
Bye-bye.
Bye-bye.